Thank you, Lilang, for officially declaring the launch of the Livability Challenge 2025. On behalf of the team, we'd like to thank you for the continued partnership and shared vision over the years. And I speak for the whole team when I say that we're excited to kick off the 8th edition of TLC. And we also hope to see everyone here at the TLC Grand Finale next May at Ecosperity. On that note, we'll be moving on to our closing plenary for today, Bridging the Climate Tech Valley of Death. This is one of our fuller plenaries for today, so as you'll see, the team is setting up the chairs and tables. This discussion will be moderated by Megan C., Director of Partnerships here at EcoBusiness. And joining her on stage are our distinguished speakers. May I please invite you all to come on stage? We have Anders So, Director of Programs at Temasek Foundation. We also have Ashley Tan, Global Head of Sustainability and Social Impact at AWS, Marie Cheong, Founding Partner of Wavemaker Impact, and Celine Tan, Business Development Director at Nandina REM. Megan, I'll pass the time over to you to moderate this panel.
Thanks so much, Shireen, and thank you everyone for being here. I know some of you have been here since 8 a.m., 9 a.m. So really thank you for your participation and support. If you need more coffee, you know where to find them. Before I start off, I'm going to do an audience poll just to wake everyone up as usual. Everyone take out your phone, take out your phone, scan the QR code that will be shown on the screen or on your card. And the question is, what is the key to fast-tracking climate tech from research to market in Asia? It's going to be a word cloud, so one word, maybe two words. And same thing as before, the more people put in the same word, the bigger that word will go, okay? While you guys are doing that, I'm going to set the context for today's discussion. Climate tech in Asia has reached a crossroads. While a range of climate technologies are emerging in the region, there's a wide gulf between research and commercialization. This is due to various reasons, among which includes extended product development cycle, where climate tech tends to have a longer development cycle compared to typical tech products, increasing the time required to bring these innovations to market, hence increasing the challenge of commercial viability. There also are regulatory and technical barriers as well, where there exist complex regulatory environments and lack of standardized policies for climate tech, and also the high cost of scaling tech as well, especially for later stage companies that are closer to commercialization. I'm not sure if you guys read the Financial Times early this week and Jessica Stenter's article as well. In the past, I think year, there have been 4 renewable energy companies in the US that has gone bankrupt. And that's the largest number of companies that have happened that has gone into bankruptcy since 2014. And that doesn't really bode well, I think, for the industry. And for Southeast Asia itself, we cover less than 1% of the world's surface, but that region also provides approximately 30% of the global carbon offset supply by 2030 if used correctly. So this also highlights the region's importance in global decarbonization efforts, particularly due to its rich biodiversity and vast forested areas as well. However, climate tech startups, as we know in this industry, often fall through the cracks between early stage venture capital, and large-scale infrastructure investment, hence the term climate value of death, because it's easier for climate companies to get enough funding to get started, but harder once they reach the point where they need to commercialize and need the money to scale. So with that, our panelists here today are going to be posed with various questions, one of which will be, how can we support climate innovations to reach commercial scale? And earlier, Mark from ComfortDelGro stated as well that we have not talked about artificial intelligence, which we will be doing in this panel. With the advancement of AI, what are the exciting areas of growth for climate innovation? And how can we nurture a thriving ecosystem that deploys patient capital and enables the widespread adoption and scaling of these solutions? With that, I'm going to just turn back to the word cloud here. Funding is a very, very big word. I'm glad because everyone here is going to be talking about funding as well. Pilots, grants, network, venture capital, very, very good words, and we'll be talking about all that too. With that, I'm going to go on to my first question to Anders. You've got vast experience in cross-sector partnerships. What ways can public, private, and non-profit sectors collaborate to bridge this valley of death and ensure that climate tech innovations reach commercialization, especially in this region with so much potential?
Hi, good afternoon, everyone. Thank you for joining our panel, and really happy to be on discussion with all my fellow speakers, panelists today. So as Li Lang has already mentioned up when she was announcing the launch, Temasek Foundation, we are the philanthropic grant maker to support early stage innovations and that are disruptive to help accelerate their commercializations to benefit people and planet. So if you look at the technology life cycle or startup life cycle, you have from ideation, growth to maturity. But at the same time, in parallel, what we actually require is the capital stack. And that's starting all the way from what we call grant funding from like governments, public funding to support early stage research, all the way to angels, to seed, venture capital, and private equity, so on, all the way to IPO. So from that's a very key enabling piece, and with different stakeholders and players along the value chain. But more importantly, at the early stage, what we see, that's where risk capital plays a very significant role. And philanthropic organizations like Temasek Foundation, we look at how we can really look at from an impact-first orientation, help a lot of these startups cross the first valley of death. And this valley of death is by no means just a small bump, but it's really where a lot of startups do not see the light of day, where a lot of these innovations that have already received significant, what we call grant funding, public funding, reach a certain point, but they are not able to cross towards commercialization. So when we think about this approach, catalytic funders like us, we are only I would say, although our funding is not insignificant, but it's actually a drop in the ocean for many of the startups. What we see is we need to actually crowd in more capital in a blended finance multi-stakeholder approach. And that's where public, philanthropic, and private sector come into play. And when we do that, when we involve a lot of these stakeholders, what we see is there's a lot of de-risking of these efforts, and there's also a greater rigor in the kind of pilots, in the kind of projects that we see. Because different stakeholders bring in their different disciplines, whether it's from an investment lens, a viability approach, the technology feasibility, etc. And that's where we can, to collectively help them proceed on a pathway towards commercialization to reach our net zero goals. So just now, when Li Lang already mentioned Equatic as a good demonstration or showcase, that's where we see different public, private, and philanthropic coming in, from the National Water Agency to co-fund the pilot project with us, to create that testbed environment to enable them to succeed. At the same time, our philanthropic capital gives them that leg up, that boost to de-risk this part of the technology, de-risking efforts. And ultimately, we also see players like Boeing, who have already committed the offtakes of the green hydrogen, the carbon offtakes from the Equatic project. So from this, you can see how the different players coming together, bringing their expertise, bringing in their resourcing to be able to help this startup succeed. And I think that's what's needed from a collective approach, a blended finance approach, because we have to do it together, and philanthropic funding alone cannot actually address this gap, but collectively we can. So I think that's how we can see it, the approach of helping a lot of these early stage startups reach commercialization.
Thank you so much, Anders. And then speaking of early stage startups, Nandina, Nandina was one of the finalists for the past edition of TLC. Congratulations as well. I'm sure the team has been very busy since then, but also want to take this in the context of Southeast Asia as well. We have such a diverse landscape, from its biodiversity to levels of developments, down to even different legal and regulatory landscape as well. And navigating these different markets can be very challenging for climate tech entrepreneurs. So based on your experience, in your corporate finance life, angel investor, and also now Nandina, what are the key considerations for climate tech entrepreneurs when adapting their solutions to these diverse landscapes?
Hi, thanks for having me. So just to give a little bit of context, I believe I'm the only startup on this panel, so I promise not to go Greta Thunberg on you. I think I'm preaching to the choir already. Nandina is a homegrown Singapore startup, and we reclaim aviation retired critical materials from end-of-life aircraft. And we are an industry first, and we bring these raw materials back into the aviation supply chain or automotive supply chain. So what we do is essentially critical in the aviation industry right now because there is a supply chain crunch. Now, to your question, Megan, on Southeast Asia, I think entrepreneurs in Southeast Asia are currently building differently. So as an example, Nandina, when we started the company, we had a very conscious awareness that we had to do things right, sustainable from the get-go. So the formation of the co-founders, we are three of the co-founders are homegrown Singaporeans, and 2 out of 3 are female. 50% of our management team are female, 50% are male, across all different ethnicity and beliefs. So for us, that was the makeup of our team. And the current ecosystem within Southeast Asia, I think there are different strokes for different approaches. It's so nuanced. Southeast Asia, from Indonesia to Philippines to Singapore, everybody faces different challenges. So what I would say to the entrepreneur scene right now is that we're all playing with what we have on the table. So one of the key things that we also do at Nandina is we are data-driven because we are founded on the fact that data basically will drive the outcome. And a lot of the financial institutions are guided by data when it comes to their risk assessment. So for us, you will notice that our business is driven by circularity, traceability, and that traceability is data-driven. So entrepreneurs in Southeast Asia are now conscious of that fact, and we're collecting data from the get-go. Another thing that we also decided when we started out is the co-founders wanted to make sure that we are in the ecosystem which supports our business the best. So that's why, besides the fact that all 3 co-founders are homegrown, Singapore is the headquarters of Nandina, and we did that because we've got the R&D capabilities, the catalytic grant and support. So we are a finalist in the Livability Challenge. We won the audience choice and walked away with $100,000. But separately, we are also a beneficiary of Temasek Foundation's support and grant. So we've got that ecosystem here, and that's why for entrepreneurs, I think across Southeast Asia, it's very important to find the base that is supportive of your business and your cause.
Thank you so much, Celine, for providing context, and also congratulations for Temasek Foundation's subsequent support for you. Ash, I wanted to turn to you. Climate tech startups here face several barriers to entry in adopting and scaling new types of sustainability technologies, ranging from high capital requirements to complex regulatory landscape. So what types of mechanisms can lower entry barriers for climate tech startups and also support the adoption of technology for sustainability solutions?
I think we need to acknowledge this valley of death, which is very real and present, and we need to find a way to help our startups cross that valley, or to at least narrow it. A recent survey said that 70% of startups agree that technology is key to scaling their solutions, but only 20% said we can use technology effectively because of this valley of death. So maybe I'll offer 3 points on which I think we might be able to help cross this valley together with them. And the operative word is together. I think the first is that we really need to pick the right technologies and the right partners. And these technologies need to be cost-effective and scalable. So we use the example of the cloud as a technology. The cloud technology is on demand, off-premise. It ramps up and down based on your usage, and it progresses with the startup as it goes through its journeys iteratively, and ensures that the costs are managed and that it can easily ramp up when usage increases. So picking the right technology is critical. I think number two is really part of the commitments that I think large organizations like ours need to make. And with success and scale comes responsibility. And that's where we commit to ensuring that accessibility to these technologies needs to be kept high, barriers to entry need to be kept low. And so we need to put our money where our mouth is. And that's why we offer financial grants and cloud grants to lower the barrier of access to use this technology when it realizes and meets environmental and social outcomes. And that is a responsibility I do hope that other large organizations embrace, because it's not enough to just say, use this technology. How are we helping them adopt it at scale to cross that valley before they can commercialize and become more sustainable? I think the third is the idea of a global public good. We all know about the tragedy of the commons, right? When was the last time we thought about a digital public good for startups, for climate solutions? We have an international payment system with SWIFT, for example, and Singapore's SG TradeX, which some of you may know is our newly launched supply chain, digital supply chain platform, Singapore Inc., that is being pushed out to the world. But besides these two platforms, we have very few public goods that folks can latch on globally. And so I think we need to create more of these, and an example of that is the idea of democratizing data for startups, for climate solutions. We've launched our Amazon Sustainability Data Initiative, which is the world's largest source of climate data that is open source. And it's free. Imagine it as a huge library in the sky with climate projections, weather data, satellite imagery. It's free to borrow a book. It's also free to put a book there. And I'll give you just two examples of how this helps narrow that valley of death. Right now, we're hosting the world's largest source of open air data. That's through a company called Open Air Quality that looks at why are some countries have unequal access to air. And this is all open source from IoT sensors that collect air data through government, through research grade, and we host it. The second example is in climate risk assessments, which we heard about this morning. NASA and NOAA have collected data sets going back to 1850, all the way out to the year 2100. It's a data mess. But with open data, you can make a data mesh of that. Because what we do through open data, through the cloud, through the analytical and AI technologies, is to make sense of those climate assessments to say, where can we predict the types of climate risks at a country level, at a building level? How can startups make use of that data? So chronic climate risk would be sea levels rising. Socio-economic climate risk would be how food and water insecurity can lead to more wars. So banks, insurance companies, and FIs can use this data to really predict. For example, in the EU, before I build a building, I need to know, will it be underwater in 20 years? And so that's the power of open data to really help us to look at these things, but we need to democratize that. We need to keep it accessible, and that is part of our commitment, and we hope, again, as a call to action, that other organizations join us.
Thank you so much, Ash. And we'll be going back to the topic of AI a little bit later on as well. But I wanted to turn to you, Marie. Venture builders as well, a big part of driving, or rather bridging, this climate valley of death. And Wavemaker Impact is Southeast Asia's first climate tech venture builder. Last year, you guys just announced the final close of its debut fund. Congratulations to that as well. So how can venture builders like Wavemaker Impact help bridge this funding gap and better support these startups in Southeast Asia, where climate tech is still considered quite early stages?
Thanks, Megan, and thanks to all of you and my fellow panelists. So first of all, I was very glad to see funding so big on the word cloud. I feel very validated, like I'm doing something in my job. Maybe I think it might be useful to redefine or add another layer to what is the valley of death. I think from a VC lens, VC is going through a tough time right now. It's harder and harder to raise capital, both for startups as well as for VC funds. So it's a tough climate, driven by macro conditions, higher interest rates, and so on. So what does the valley of death look like from a VC perspective in climate tech? So I think it's two things. So the first thing is about speed of growth. And at Wavemaker Impact, we build and invest in 100 by 100 companies. So companies with the ability to abate 100 million tons of carbon dioxide equivalent and be $100 million revenue businesses at scale on an annual basis. So when you make a direct impact on emissions, or you endeavor to do so, that means making a change in the physical environment. So you've got to deploy new assets, create financing options for other people to deploy new assets. And you've also got to create incentives for folks to change behavior. And in order to do that, often, because there is a physical asset involved, you need access to debt capital. So one of our first investments, a company called Agros, is replacing diesel irrigation pumps with solar irrigation. The biggest constraint to growth was inventory financing. Equity financing is a very expensive way to fund your inventory. And that was a big challenge to growth. So other forms of capital, be it philanthropic capital, but also, different types of catalytic debt. There's a lot of conversation right now around blended finance. My personal view is those conversations are taking too long. So, we're trying to figure out now with some of our LPs and investors, how can we speed this up? How can we provide catalytic debt quickly that has very clear additionality and impact, but also enable startups to crowd in commercial funding faster or commercial debt faster? The second second component to redefining kind of the valley of death, which I think a venture builder like us really helps with, is a lot of times in climate tech, the conversation is about the solution rather than the problem. And so we see a lot of solutions in search of a customer, or solutions hoping that one day someone will buy their product in tech. I think that conversation needs to be flipped around to focus instead on what are customers actually asking for today, what are their pain points and pressures today versus what might it be if regulation comes in down the line. Because in Southeast Asia, especially, a lot of customers, a lot of enterprise, a lot of small business owners, they're focused on very day-to-day issues. It's still very bottom line. Sustainability is still a luxury. So you've got to address a real pain point. So I'll give you an example. One of our companies, Helios, launched Southeast Asia's first solar mortgage, where customers get access to cheaper loans or larger loans as a result of putting solar on their roof. The first target market is the Philippines, where the average house price that they're targeting is $100K USD. So these are, not your very luxury homes, landed properties in Singapore. These are very, middle class, middle income families. And when they opt for a Helios mortgage, they're doing it on the basis of a discount on their interest rates. It actually has nothing. They don't stay up wondering about climate change. They don't care about how green the grid is. They just see the difference between a 9% mortgage and a 7% mortgage, and that's their basis for buying. So looking at ways of what do customers really care about, and how can we help meet those needs through green technology, I think is one of the fastest ways to drive growth and adoption of climate tech in the region.
Thanks so much, Mary. I wanted to stay with you for just one more question, because funding was such a big word. Venture cap investment in this climate tech sector has slowed, despite it being on the rise as compared to the past 10 years. And I guess we can then see that investors are being a lot more cautious with where they put their money, especially in terms of climate tech as well. How are VCs seeing this very critical phase between R&D and market-ready products? I think that was a big question we're kind of posing as well to everyone as well, but maybe we'll start with the VC side of things.
Yeah, I think nobody ever likes to hear the VC perspective, I try to listen to my LP's perspective, but I'm the one with the problems, not you. So it all goes down the line. But one of the pressures that VCs are under right now, when they think about raising money again and launching funds, is it's called distributions to paid-in income. It's DPI, which basically means how soon are you able to return money to your LPs? And I think when we think about the challenges with climate tech and funding climate tech, and why that is slowed, is because it's often difficult to see with climate tech, where do the exits come from? How soon is the next funding event or the next funding milestone? And in some ways we're very mission driven, right? I think all of us here are here because we're incredibly passionate about doing something about climate change. But I think there are some real economic realities to getting VC funding deployed. And one of them is not just locking away money for 10 years or more and hoping for outsized returns, but rather showing progress in your portfolio and being able to distribute money to your LPs along the way. So I think that's kind of one of the big challenges. And when VCs start to look at climate tech companies, I think increasingly it's with the lens of how quickly is there going to be results? And in our early stage portfolio, for example, we have a company called VFlowTech, which is a deep tech company in vanadium batteries. And with even in spaces where a lot of R&D is required, there are signs of traction. So, for example, I think vFlow has over 50 projects in its pipeline, which equates to over $1 billion of potential pipeline. So whether or not all of that pipeline gets realized and so on is a different question. But what it shows is that there is very, very strong market demand for this product, which as an investor, then you think, okay, this is a bet that I'm comfortable in taking.
Thank you so much, Marie. And I see Celine very eager to get into this conversation because we had a conversation outside as well. We're talking about any financial banks here? No? Okay, never mind. Because we're talking about how, I guess in Asia, the products that banks are offering are not good enough for climate tech startups like Nandina. So maybe you wanted to comment on that as well, but also in terms of this critical phase between R&D and market-ready products, tell us about some of the key challenges that Nandina faced in scaling its solution from concept to where it is right now, and obviously how the TLC platform has also worked, how it has supported you as well.
Okay, very loaded question. Let me start off with the gap. So I wrote an op-ed for Eco Business after the Eco-Prosperity Week. It's on their website. It's entitled "The Elusive Inflection Point of Impact Investing." So we do have good intention VCs, but unfortunately, when we do talk to them, when they are keen to come in, it's usually Series A. Once we're at commercialization and we're ramping up stage, right? So what happens after R&D and before commercialization? That's the fundraising valley of death. For Nandina, what we have done is, the good thing is 2 of our co-founders were previously from the VC world. So we took a very conscious decision, again by design, to claw our way out of the valley of death as quickly as possible. So how we managed to bridge that gap is we went out to as many angel investments as possible. So we brought on family offices, we brought on ultra high net worth individuals. So angels investors plugged that gap. Then we went out to grant challengers like TLC, right? Because TLC gave us platform and network. It gave us additional visibility on a world stage so that at least, we can bring our concept and idea to a wider audience. And then, of course, it's other catalytic funding. So for us, we're only 1 year old, but we're already on the cusp of commercialization. To Marie's point, a lot of startups, so 7 out of 10 startups die in the first 3 years. So that's usually the time frame of the valley of death. We are 1 year old. We're on the verge of climbing out of that pit. And how we did that is from the very beginning, we engaged the end customer. So we know that a startup can't change the world on our own. So we formed the Aviation Circularity Consortium this April. And among the founding members are industry giants like Qantas, like Sumitomo, Gemco. So all these are big aviation names. We had the acute awareness that when you are small, you have to stand on the shoulder of giants so that you can see further, reach further. So for us, we played it very strategic from the very beginning so that, when there are VCs that are ready to bring us to the next level, to punch even harder, we're already there. But the valley of death is still a challenge for a lot of startups who are younger and inexperienced. The co-founders and the management team comes with a very strong set of industry backgrounds. So we are already pretty advanced in our careers. So hence we had the industry connectivity to tap into. For the banking folks, there is a bit of an opportunity in Asia. What we do see missing is there is a shortage of innovation banking. So a lot of the commercial banks, they do green loans and transition loans to their existing customers. So as an example, if a startup in Singapore were to go to our commercial bank and ask for a working capital loan or inventory loan, they would ask us things like, may we have 3 years of financial data? Then we'll go, but we're only 1 year old, and my bottom line is going to be red for a few years, right? So there is a gap. I think the US does this very well. There is an ecosystem of innovation banking already. It's a higher risk banking product, but it's part and parcel of having a very healthy entrepreneurial ecosystem. So I think we look forward to that becoming available in Singapore, in Asia, but we're not waiting for it. So we have to claw our way out of this pit very quickly.
Thank you, Celine. I think that provided a really good look into your experience as well, and Nandina being only 1 year old, and soon be able to call out the value of that as well. And for all of you, I know I said TLC, but the Livability Challenge, we like to call it TLC for short. I'm going to move on to Ash. We did talk about AI a little bit, and that was missing from the previous panel discussions, I think. Just in May, actually, there was a UN multi-stakeholder forum on science, technology, and innovation. And there was actually a big urge there, for investment in AI to be more focused on solving global problems as opposed to the big powers in the world kind of just focusing on winning the AI race just because. And that this should really be focused into solving the 17 UN SDGs. And in that way, I know that Bezos also launched, Bezos launched the Earth Fund, that announced a $100 million grant to combat climate change with AI. And with that, technologies like cloud computing, Gen AI all offer tremendous potential to advance sustainability efforts when harnessed for good. And AWS in particular is leveraging their cloud infrastructure to improve energy efficiency and power all global operations with 100% renewable energy by 2025. That's in 1 year. At the same time, AWS is also TLC's technology partner, and UCFS's Tech for Good partner as well. So tell us more about the model behind these types of strategic partnerships.
Thanks, Megan. Let me answer that question with a call to action, I think, to everybody in this room. A call to action that's underpinned by a theory of change that leads to these models with Temasek and with eco-business. And that theory of change is essentially that it takes a village. It takes everyone in this room, different actors, to bring together their uniquely differentiated roles to the picture. And so I think there's 5 C's involved, and I'll use the TLC as an example. The first is financial capital, and that's where Temasek, folks like Wavemaker come into the picture to really fund this. The second is tech capital. The new currency is no longer just cash, it's data, it's Gen AI to power these solutions. And that's where responsible tech providers need to come in to provide that technology at scale and at cost-effective ways. The third is knowledge capital. Nandina, for example, cutting-edge technology, subject matter expertise to develop the products. The fourth is political capital. We need governments with friendly regulations. And in Singapore, I think we're quite blessed to have regulations that give good grants and tax breaks to our startups. And the fifth is organizational capital, where eco-business comes into the picture to bring all 5 of us together. But it takes that village to really scale these solutions, and no one can do it alone. But the key is to create scalable and repeatable frameworks and models that we can use. But as an example of that, we are extending our support not just for TLC, but to also work with Anders and Lilang from Temasek on the Net Zero Challenge in Vietnam or the Climate Innovation Impact Challenge in Indonesia. But it follows the same model. So I just sort of welcome everyone in this room after this panel. Can we think of ways to work together to build partnerships that are not obvious? This conference was about blended finance. But why not we think of this in terms of blended partnerships, where blended finance is a subset of these partnerships, otherwise known traditionally as public-private partnerships.
Thank you so much, Ash, and thank you for your support as well. I'm going to turn over to the audience very soon for your questions. So if you could also use the same QR code on your badge to put in your questions, and I will also post them to our speakers here. But I wanted to turn to Anders here, just thinking to tech a little bit, because we've just launched our 8th edition of TLC, and it is a global search for disruptive deep tech solutions that have the scale and impact to reduce carbon emissions across industries. Tell us more about the intention of why deep tech in particular, and what kind of solutions will we be looking forward to seeing?
So the idea of deep tech, if you hear the stories of Nandina and then what even Marie shared on vFlow, a lot of them are working on another way of addressing deep tech is called hard tech, and it's very hard to get all these things to work. So you can see that not only it requires deep science and engineering, you also have a very longer iteration cycles for the tech development. And ultimately, there's a lot of CapEx needed for these kind of projects. Unlike, you can just load it on the cloud. But that's where Ash comes in, where you leverage some of the data in the cloud. And that's where patient capital is very critical. Patient capital with longer term horizons to ensure that these innovators working very hard on their solutions to address very big problems they'll be able to bridge the funding gap and to have really the shot at getting their climate solutions to the market. And this also will allow a lot of these innovators to focus on really the hard R&D topics and prototype development without diluting them at this early stage, so that the immediate pressure for profitability is also sort of like relaxed a bit at least because for the nature of these solutions. And for them, this will be, by doing that, they actually then can have a greater foundation to then attract follow-on and private capital to help them scale up. So I think that's why we at Temasek Foundation, we focus very much on the deep tech side, because we see that there's a very big gap, a significant gap, and being philanthropic in nature, impact first, we can be able to afford that patience and to the startups. So when we look at the two topics on decarbonization and also even the cool earth, I will summarize them into 4 R's for just easier remembrance. So the first one is reduce, right? We all know reduce. So when we talk about reduction, we are talking about reducing need for energy, reducing need for to transit away from the fossil-based economy. That includes built environment. Can we reduce the energy needed for building, cooling system or heat pump solution? Those will be the kind of reduction in just consumption. And we look at also reduction from the sense of hard to abate sectors, even from food production, from manufacturing, or textile, or even even large-scale cement and steel. Are there ways that we can reduce the need for energy by using new green solutions, or even using waste heat, for example? At the same time, when we go to the next R, reuse. When you say reuse, it's all the waste to resource. Can we see how, even right now, plastics, for example, and other kind of waste that we traditionally see as waste, they could now be a valuable source of resource, and we can mine, in a sense, an urban mining solution, where we can use this to power our economy away from all the fossil-based feedstock. And the last one, instead of, I'm not into recycling here, but we are talking about replace. Can we even replace with a new form of energy, renewable solutions, whether it's hydrogen, green electrons from solar and wind? And that will be kind of what we think when we talk about decarbonization solutions. And for heat, the last R I want to say is resilience. When we look at a lot of the communities being affected by right now the rising temperature, we need to even help them, enable them to be more resilient. And we need to look also at adaptive solution. As much as we look at mitigation, we need to look at also adaptation. And that's where we are looking for solutions that could possibly address it at a large scale. How can we even ideally cool the whole earth down? In the past, there was some, we had internal discussions in 8 years ago when we started out. How can we create a global, air conditioning system to even cool down the earth? Is there such a possibility where we can create a cool environment? And I think that's where, when we talk about TLC, these are the kind of solutions, disruptive solutions that we're looking for. And I feel, I just want to go back to the point on the capital and how, the startup is really, when we look at VFlow, in fact, incidentally also supported by Temasek Foundation. And when we talk about collaboration, it's coming in to see how, as an ecosystem, as a village, we can come in to support disruptive startup on their journey. And it's not the blind leading the blind here, but it's really success breeding success. And I think that's how we can work together to see disruptive solutions and to address our climate goals.
Thank you so much, Anders. I think you covered a lot of ground in those questions. And yes, I think this is a call for all you climate tech founders as well to look at our TLC website and start to apply too. I'm going to turn over to the questions from the audience because we have 2 there. If you can just put it up on the screen. First one is from James. Climate solutions rely on physical products, not apps. Crossing the valley of death is longer and harder. Surely effective marketing is the key to success. Do you agree? I feel like this is a do you agree, yes or no? But I'm sure there's more to that. Does anyone want to take the question? Effective marketing. Marie.
I mean, I think getting your product out in the market and visibility is very, very important. But I think folks in the startup ecosystem, not just in climate tech, know that it's actually, relatively easy for founders to get airtime, in the sense that, you can kind of, if you're into that sort of thing, you can make you can spend a lot of your time coming to events, speaking at things, sharing about your product and services. But at the end of it, what really matters is traction. And so traction is as a result, as Lean mentioned, of understanding your customer, of solving a real pain point. And then, of course, marketing can help accelerate. But marketing in and of itself cannot be the end game.
Yes, of course, Ash, please go ahead.
I think I totally agree with Marie, and to your earlier point that we need to look at solving the problem rather than having a solution up front. I don't think marketing is the main differentiator, and I'll give you an example of a climate solution that relies on low-cost physical product, but because it's trying to solve a real problem, it's scaled. And this is a homegrown example. Some of you may have heard of Netatech, which is the first vertical farm in Singapore, an urban irrigation company that uses automated farms. And they have 100 projects in Woodland campus, SIT, HTB. And so our latest project, and it's a climate solution that has minimum marketing. It's in Lim Chu Kang, they have a farm there, and they're using IoT to measure the optimal yield of soil, mineral, wind, water, using very cheap IoT sensors that are attached to different vegetables, kailan, cabbage, spinach. But the problem that they knew they had to solve was, it's not a Singapore problem. This is a problem in the rice bowls of Thailand, of Indonesia, or China. And the idea here is, and how we supported them was we provided the AI precision tools to create AI models that automate the distribution of water, soil, etc., or these faucets. And these AI models then become open source and given out to the smallholder farmers across Asia. That doesn't need marketing. That's a problem that we're trying to solve together. And there's a real problem that if you can crack it, you give it to these smallholder farmers who can implement, to them they're trying to survive. You ask them to build climate solutions, they'll look at you and say, I'm just trying to feed my family here. But if you can bring to them something that's low cost, it makes sense, it saves them money, and saves our earth, we can really scale that together. So I think it really is about looking for the right problem to solve, rather than marketing, which is probably something a bit more ancillary.
Thank you, Ash. I think that also goes back, echoes as well what was talked about earlier, that we're looking at problems to solve as opposed to just solutions themselves. With an eye on time, I'm going to take just one more question from the audience, the one with the thumbs up. A carbon CO2 management software got $160 million, but hard to abate sectors are starving. Are we investing in an easy, fast to scale software versus a hardcore engineering needed? Celine, of course.
The answer is yes, a big renouncing yes. A lot of the VCs and family offices in Asia, they tend to be more interested in investing in SaaS, software as a service, right? But the real world problem, so for us, because we are engineering based, we are chemistry based, we are real science based, right? So we have encountered difficulty because we do need to build a processing plant, right? So we will be building our carbon fiber recycling plant, and we'll be opening next year at Seletar Aerospace Park. So when investors hear that, they're like, ooh, big capital investment, right? The cost is high. And then, we start to go into details, and the usual concern is the higher the capital return on investment, right? So I would say that more needs to change. AI is now the flavor, but at the end of the day, real life problems will always need a real life solution, right? So we operate in the real economy, and as a result, I would say open up the investment horizon a little bit more, because SaaS is also very risky to invest in, right? It's cheap to set up, and it bubbles away quickly. But when you solve a real life problem, there's a need. So for us, in the aviation sector, it's open knowledge that the supply chain is very backlogged now, right? From critical materials, from shipping delays, logistic delays. So that is not going to go away for a very long time. So I would say for VCs, they usually would prefer software. I would say, let's take a look at the real world, because we live in the real world. The digital world is great. It makes life more convenient, but it's also quick to go away. I think it's time we bring back investments in the real reality, in the real economy.
Thank you so much, Celine. Anders, do you want to also comment on that?
Just a personal perspective, because I think when we talk about sustainability in not just planet, etc., sustainability in growth, and we say growth is also financial returns. And if everybody is looking for quick wins, the gravitation is towards those that actually give a faster return, a shorter cycle. But in fact, if you think longer term, back to Celine's point on horizon, then that's where you see value capture in a longer run, and that's where you are able to see whether or not these things become more investable from that lens. And I think that's what is needed, is the short-termism, and being able to also getting more people on board on that, so that we are able to unlock more funding for these kind of solutions.
Well said. Thanks so much, Anders. One more from Jessica, because she asked it. One other piece of the puzzle is the lack of founders or entrepreneurs in the region. It's a tough journey and there aren't enough. How do we solve for this? Marie.
Yeah, I feel like...
This is your question.
Yes, but so Jessica, thank you. I mean, I think what we don't have is enough of a pipeline of climate tech companies. Actually, I think there's a lot of interest from founders. So we're a climate tech venture builder, so our deal flow effectively is founders, and then we build companies together with them. For founders, to appoint 4 founders, we talk to, I think, about 300-400 people. So there's a lot of interest from founders to come into the space. I think there's a couple of interesting things. So a lot of the founders don't necessarily come from the industry, something related to where they want to build. So like Celine mentioned, come from diverse other backgrounds, identify a problem and go for it. So I think maybe what we need to do more of is demystify climate tech. So climate tech doesn't need to be always just deep tech and science. At Wavemaker Impact, we specialize in business model innovation. You don't need to be a specialist in the space. You don't need to have had 3 or 5 years experience in sustainability in order to understand the space. So I think there's a lot that we can do to actually show that having been involved in startups, having been involved in building things within a corporate context previously, actually provides you with a lot of transferable skills that could make individuals great climate tech founders. So if specifically anyone wants to ask about that, I'm always very welcome to have a conversation afterwards.
Thank you so much, Marie. With that, eye on the time, we're going to wrap up really soon, but just one final question to all the speakers. What is one single action or priority that will most effectively bridge the gap between research and commercialization for climate tech in Asia? Because we're on a time, 30 seconds for each one of you, okay? All right, we start with Marie. Yes.
Find a customer who will pay you.
That's a good one. I like that. Okay. Ash.
I think you really need to build the right community. And so a quick example is we host a climate pledge, which is cost to ourselves. There's no money in it for us, and it has 500 signatories. Our competitors are there. Microsoft is there, Uber, and it's reach net zero by 2040. But the value of the community is not window dressing or greenwashing. It's a community of best practices that you share, and that you're able to uplift each other. We're all facing a common existential problem here. So the pledge is just a tool. But the idea here is finding a community, and startups need a community.
Thank you so much, Ash. And Celine.
Well, a bit of both, really. So I would say as a startup, it will help. Strategic partnerships will help greatly. So one of the things that eased our very, very arduous journey is the strategic partnerships with potential customers as well as business partners from the get-go. So it's getting their feedback on what they need in the industry and the problem, and then we build according to that so that we're not wasting our time. And they guide us. They provide us with the platform. They provide us with their network. The introductions that we've had wouldn't have been possible if they didn't show us the door. So I think strategic partnerships cannot be underestimated. I think that's been quite paramount to our success.
Thank you, Celine. And finally, Anders.
For me, I'll just say like-minded is echoing Ash points, bring like-minded people together in the room to collaborate, and that's what we hope to see through not just these kind of events and even platforms like TLC is ready to crowd in resource, ideas, capital, and different expertise in the room so that we can really address it together. And I think the climate goals can only be achieved as a collective. So. Thank you.
Thank you so much, Anders, and thank you so much, everyone, for being here. I think we had such a good discussion. Took a little time, but I'm sure we can take it offline. With that, I'm going to pass on over to Shireen to introduce the next speaker. But before that, sorry, photo for everyone.